and welcome to Outlook Money's Investment Made Easy podcast series. This episode is spearheaded by ICICI Prudential Asset Management Limited. The contents of the discussion should not be construed as Outlook Money's editorial recommendation. I'm Varsha Jain from Outlook Money and your host for this session. Today, we will discuss ICICI Prudential Innovation Fund, which is set to be launched soon in this month, and what it offers. These days, more and more investors are looking for customized investment products for their specific needs. In keeping with the changing requirements of the customers, many companies are becoming innovative and coming up with new products. ICICI Prudential Innovation Fund appears to be one such initiative. I'm delighted to welcome Mr. Chintan Haria, Head Product Development and Strategy, ICICI Prudential AMC, who will talk about this new fund offer from the fund house in particular and innovations in investment in general. Welcome, sir, to this episode.
Yeah, thank you. And wishing everyone a healthy new financial year. Thanks a lot to Outlook Money as well, as always. And looking forward to a good discussion on the markets as well as the NFO. Thank you.
Thank you so much, sir. To start with my first question, I would like to ask you, could you please tell our listeners what the ICICI Prudential Innovation Fund is all about and what should investors expect from it?
So, if we look at investors in general in India, they are looking for different kind of options to build their overall asset allocation bouquet. So, if we look at what we've been speaking to investors for the last 10, 15 years, we're saying that asset allocation is important. Within asset allocation, you'll have a mix of dynamic asset allocation funds, equity funds in the flexi category, and certain themes which you can add to your overall portfolio mix to enhance your long-term returns. We've been very big proponents of value as a category, and we've seen in the last 1.5 years how value as a category has performed well relative to growth as a category. Now, from an investor standpoint, as India is growing and growing at the fastest pace among comparable economies in the world, there are various opportunities which are picking up. And one such opportunity is in the field of innovation. Now, innovation, while it may sound a word which is connected to only technology,
Mhm.
across sectors, we are seeing innovation in India. And so, in the form of the ICICI Prudential Innovation Fund, we are bringing to investors a fund which can be part of their overall asset allocation for the long term, which will allow them to participate in those companies which are across sectors trying to improvise, trying to do research and development, trying to bring out new products, processes, and services for the betterment of delivery from a investor standpoint. And hence, the ICICI Prudential Innovation Fund is a very simple concept wherein those set of stocks which are doing something which will improve your quality of service product and your quality of experience in terms of the processes that will help those companies grow. We've seen enough examples in the past of how, for example, earlier there was a landline telephone, now we have handheld mobile telephones. Earlier, the way we used to travel was different, now the way we travel is different, and so on and so forth. And these innovations help us to probably achieve more efficiency. And from an investor standpoint, if you're invested in these companies, you end up basically getting the benefit of the upside. We've already seen that, right, in terms of even banking. Earlier, the way we were doing banking was branch banking, where we used to go to a branch. Now the branch
Mhm.
has come to our smartphones, and most of our banking is done on the phones. And those banks which were leaders in terms of digital interface with the investors have actually done well in terms of growing faster. So innovation fund is one example or is one choice which the investors have to participate in those companies which are growth oriented and which are looking at new types of technologies, new types of innovations for doing the business in which they are. And they could be across sectors. It could be defense, it could be technology, it could be pharmaceutical, it could be banking, like I said. Irrespective of which sector, there are innovations happening across sectors. And the ICICI Prudential Innovation Fund is a one-stop shop, which we believe will allow investors to participate in a diversified portfolio from an innovation perspective. Thank you.
Very rightly said, innovation is everywhere in every sector. But just to reiterate, what role do you see that innovation will play in the future of investing per se?
If you look at investing also, and most of you would have probably experienced it earlier, we used to probably have to, from an investing standpoint, if I have to go back to the basics, if one had to invest in mutual funds or if one had to invest in stocks, you had to either call up your broker or go to a mutual fund office, or your relationship manager or your independent financial advisor would probably make you fill forms, and then the money would go to the mutual fund through a check. All of that today is something which seems archaic. And from an investor standpoint, it is so easy to just open the, or rather, switch on the app or open the app and invest, be it in mutual funds or equity through the online applications which are available. So, investments itself are changing and investor behavior is also changing. And because now investments are made so easy, we are seeing a very large number of investors across India. Earlier, investments were probably more in the metro cities and tier one cities, but now with banking deepening to deeper parts of India in terms of tier two, tier three, tier four, and the KYC happening online, and the investments in terms of opening of your broking accounts, opening up your mutual fund accounts or folios being so easy, investors are able to invest across. So from a investor experience perspective, this is one example of how innovation is making it easy for people to invest. Such examples are aplenty across sectors. If you look at even from a automobile perspective, typically maybe even 10 years back, we could not have imagined that electric vehicles will become a larger part, or we would be probably looking at phasing out of diesel engines. Most of the large companies are phasing out diesel engines because they are slightly more polluting, and moving towards electric vehicles or petrol vehicles or hybrid vehicles. So this constant innovation which is happening, look at, for example, in the field of energy itself. We all know that coal is important and we are coal energy. Coal is a part of our energy mix. But if you look at from a in today the reality perspective, solar is becoming larger, hydropower is becoming larger, and with the investments which we are making in hydrogen as a energy concept, it is completely going to redefine how energy in India is going to be after maybe 10 years. So all this across sectors, for example, we used to import most of the defense equipments. Today, if we look at it, our own defense companies are able to make helicopters, fighter jets, um, the even the carrier ships, etc. So we are seeing a lot of innovation happening in India across sectors, and this is a very good way to start participating in that in a diversified fund called the ICICI Prudential Innovation Fund. Thank you.
Yeah, okay. So being innovation as a theme, what would be the broad portfolio building strategy of the fund?
So from a portfolio building strategy, the basic rules that we follow across all our diversified funds don't change. The objective of the fund is to ensure that we are in the innovation theme. So at least 80% of the portfolio will be in stocks which are covered by the innovation theme. Uh, 20% of the stocks can be in innovation theme from outside of India. So you'll get some exposure outside of India also. And from a portfolio construct perspective, the basic rules of not having very high concentrations, having a diversified portfolio, and this being across sectors, having also diversified sectors and not concentrating the portfolio towards any one sector. All of that will be taken care of to ensure that investors get the right exposure across sectors to those companies which are in the innovation space. And from a portfolio management perspective, the scaling up of the portfolio as more and more money comes into the innovation fund can also be done, and the investors ultimately get the benefit of diversification within the innovation theme. Thank you.
Okay, so since innovation is prevalent in all the market segments, as you have said, and not restricted to a particular sector or segment, um, what would be your investment strategy?
Sure. So typically across sectors, definitely innovation is there. Even within market caps, if we look at it, uh, while the popular perception is that the larger companies, because they have deeper pockets and they have bigger balance sheets, they are able to innovate. maximum innovation actually comes from smaller companies at times. So all the newer technologies which come normally come from the smaller companies. So even in this fund, for example, we'll have a good mix of large cap, mid cap, and small cap. The proportion will be determined based on the available opportunities. Since this is a bottom-up fund, it will be a stock-specific research which will be done, and then the combination of those stocks where we have the highest conviction will decide the large cap, small cap, and mid cap exposure. But I would believe that given the efficiencies of portfolio management and the liquidity constraints or liquidity criteria that we normally like our funds to follow, the fund will have a reasonable mix of large cap, mid cap, small cap, wherein the fund's portfolio will have a large cap tilt, but will have mid cap, small caps also. The proportions will keep varying, but in order to ensure that the fund does not become too volatile or does not have any portfolio management related issues, if there are redemptions because of market movements, the fund will have a good mix of large cap, mid cap, small cap with the tilt towards large cap. While small cap, mid caps, even if you have a smaller proportion of your portfolio, you're able to get the advantage as they keep growing higher. So I think across large cap, mid cap, small cap, you will see exposures in this fund. And it will be basically keeping due process in mind of having to manage a portfolio which will have a larger size in due course. Thank you.
Okay, so tilted towards large cap, but it will contain all the types of stocks, small, mid to large. Can we say it is a multi-cap fund?
Yeah, so for example, it will have the ability to invest in large cap, mid cap, small cap, so across sectors. So it is basically a fund which is not constrained by sectors, not constrained by themes, not constrained by sectors, not constrained by uh, the market capitalization. And so from a fund management perspective, there will be enough flexibility to invest across large, mid, and small, across sectors, and even internationally across international funds and international stocks, which provide the innovation theme. The international piece is, of course, capped at 20%. So we can't have more than 20% in international themes or international securities within the innovation theme. But yes, that's how the portfolio is going to be. It will have enough flexibility. Thank you.
So you already answered my next question. I wanted to ask that would you focus on innovation only in India or across the globe? So
Actually, while innovation happens in India, of course, there is a very large part of the innovation which happens outside of India as well. Maximum new technologies, etc. Because if we spend, let's say, X, there is 100X, 1000X maybe, which is getting spent in terms of research and development across the world. So be it in pharmaceuticals, technology, defense. So to ensure that investors do get an exposure or do get the advantage, if at all there is an opportunity outside, we've kept it flexible to allow the fund to invest 20% in opportunities in innovation outside of India, so that the investor gets the benefit of innovation which is happening outside of India, as well as, of course, the rest will be innovation which is happening inside India. So it's a combination again, wherein not just large cap, mid cap, small cap, and not just across sectors, but across the globe as well as in India, the innovation which is happening, you'll get an exposure to. Thank you.
so it is flexible that 20% is kept for investing in outside India.
Yeah.
Uh,
So
uh,
up to 20%. So anywhere between 0 to 20%, depending upon the opportunities. If there are no opportunities outside, then we may choose not to invest outside. But if there are opportunities outside, a maximum of 20% may be invested outside. Yeah. Thank you.
all right. Um, Typically, larger companies are considered well positioned to take advantage of innovations as compared to smaller companies. But your portfolio mix, could you tell if in percentage what would be in terms of large cap, mid cap, and small cap spaces?
So like I said, in terms of the portfolio construct, while the tilt will be towards large cap to ensure the liquidity of the portfolio and the scalability of the portfolio remains, the exact large cap, mid cap, small cap proportion will be essentially a sum of the bottom up opportunities which are available. So what will happen is there are various analysts across various sectors who are doing bottom up research, and across various sectors, whatever are the innovation oriented stocks or innovation oriented scripts which are there, companies which are there, the fund manager will basically analyze those and then create a portfolio out of those of maybe around 30 to 40 names, which will basically add up to the portfolio. And the large cap, mid cap, small cap will be a byproduct of those bottom-up research and bottom-up combination. So there's no specific defined large cap, mid cap, small cap that we want to target, but it will be ultimately a summation or a combination of the bottom-up work that we do. But generally, to manage liquidity and to ensure efficient portfolio management, the portfolio will have a tilt towards large cap, and there will be a larger share of large caps in the overall portfolio mix. Thank you.
Okay, and now my last question is that who should invest in this fund?
So, if, like I said, the portfolio management will ensure that you have a diversification only in extreme circumstances. If the markets become too cheap and there are so many opportunities available in mid and small cap, will there be a higher tilt towards mid and small cap? So, it is a flexible fund wherein there is no sector constraint, there is no large, mid, and small cap constraint. There is no, I mean, there is also an opportunity to invest outside. It is a growth oriented, by definition it is innovation, so there will be a certain element of growth oriented investing in this. So from an investor standpoint, those investors who follow asset allocation and who have a diversified approach towards investing can look at investing anywhere between 5 to 10% of their overall portfolio in this theme of innovation, because ultimately in the long run, if innovation becomes a very large theme and innovation does well, you get the advantage of participating in it also. So as we always say, the core of your portfolio should be the balance advantage fund category. On top of that, you build commodity exposure through gold ETFs, then or gold in general. And apart from that, international investing is also there of 10%. And if you have flexi cap and themes, within those 30% of flexi cap and themes, you may want to look at having maybe 5 to 10% of your overall equity exposure in a theme like innovation, because that is a completely different experience altogether in terms of the set of stocks, the thought process. And as India grows, you would agree that it is only those companies which keep on reinventing themselves and keep on innovating, which probably end up having durability, which probably end up having longevity, and end up growing. So there is no choice but for corporates today to keep innovating for growth. And if a corporate innovates for growth and is there part of your portfolio through the ICICI Prudential Innovation Fund, I think that would be a good fit from every investor's portfolio mix perspective. I don't think there is any restriction on the type of investors. All investors who have a long-term vision of India and who believe in the India story can invest in the ICICI Prudential Innovation Fund. The only caveat is in equity markets, you should have a 3, 5, 10-year view. The longer you keep, the better it is. And so don't look at returns 6 months, 1 year, and don't worry about the market ups and downs. In the short run, markets do go up and down because of reasons which are temporary. But in the long run, if the economy grows, which we believe India's economy will move from $3 trillion to $5 trillion over the course of next few years, India's growth will also be on the back of innovation by Indian companies and corporates. And so the ICICI Prudential Innovation Fund fits into every investor's bucket. Thank you.
Thank you so much, Mr. Haria, for joining us today. Our listeners are sure to benefit from the insights and details discussed in this episode. With this, we come to the end of today's episode of Investment Made Easy podcast. Listeners, we hope you enjoyed our conversation today. Please don't forget to share your comments and feedback on this episode. You can also share your suggestions and questions at letters@outlookmoney.com. We'll be back with our next edition soon. Till then, stay safe, stay invested, and keep following Outlook Money, your favorite personal finance magazine. Thank you.